Hello and welcome back to my daily analysis videos with me, Richard Perry, market analyst at Hantec, on Tuesday the 8th of December. Now we're looking at this gold chart, and I discussed how gold was recovering yesterday, but it looked as though the recovery was starting to stall around the old key resistance. Well, that resistance got taken out quite decisively yesterday, and it now means that gold is into a really important phase, because there is a reaction high that happened at $1,900 back in November. And if the market can get above that, that really, I think, changes the outlook to an extent once more, because essentially at the moment what we see is, I think the market broke down below 1850, and that was a significant moment because it continued this run of lower highs and lower lows. Now we've got another lower low, obviously, which came in at that 1764 mark. The market has then rallied quite sharply from that, but how that rally is now treated is going to be really important, because I think if it now starts to fall over underneath $1,900 in this resistance band, which is overhead supply, key overhead supply in this band between 1850 area and $1,900, $50 worth of resistance. If it then falls over in that band, then you are likely to still see that this is just a continuation of this run of lower highs and lower lows. The market has recovered well, but essentially it is still just unwinding the oversold position. It's now just into the 50s on the RSI, and you'd think that if that was a point at which the market started to fall over in those 50s on the RSI, then that would still play a part as being just a recovery within a bear scenario, a bear trend of lower highs and lower lows. So it would suggest that this $1,900 area of resistance, this reaction high here that we saw in mid-November, is crucial. If the market falls over underneath that, then I think we're still in that bear phase. But if it goes above 1900 and then starts to close consistently above that, and essentially that would then also be above all the moving averages, then that's an improving outlook once more, and we can then start to trade this as a recovery trend, a serious recovery trend. But for now, I mean, gold has been in the rebound mode for just about a handful, maybe 6-7 sessions, but it is certainly developing. But if it falls over underneath $1,900, I still think we're in that corrective mode and you're selling that strength. So it's a really important phase how gold plays out. So let's look on the 4-hour chart. You can see it broke above 1850 yesterday. So that 1850 level of support breakout becomes supportive now. So 1842 to 1850 area, key support on a near-term basis. You've got that uptrend that comes in around 1835 today. Hourly chart looks a little bit less decisive, but gold is in a really interesting phase. So let's just see how this one plays out. But it is a really important moment for the gold recovery and how it pans out. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and click to watch Trader Talks, our videos that give you top trading ideas.